Hello, traders. Gary Wagner with the Gold Forecast coming to you live today, Sunday. It is October the 10th here in Honolulu, Hawaii. It is Monday in Australia, and Forex Gold has opened. We've had an interesting day as the range in the last 2 hours of trading, these 2 hours of open, it did open about $5 higher, traded to roughly the 1353 area, and as you can see right now, it has come off of it just a little bit, currently trading roughly at 1351. It's 1350 and change. Now, predominantly due to a weakening dollar, out of the $4 in gain, $1 is due to buying of gold, but about $3 is due to the predominant weakening of the U.S. dollar. Now, of course, we have the global finance chiefs, which right now are running into some difficulty. Now, this is the latest out of Bloomberg, and of course, we have the IMF meeting right now. And according to them, leaders of the world economy failed to narrow differences over currencies as they turn to the IMF to calm frictions that are already sparking what we call protectionism. Exchange rates, which of course we have had this feudal tremendous price war, kind of a race to the bottom in the currencies, with all of the currencies wanting to devalue, all of these economic powers, wanting to devalue their currencies, mainly because they believe that that is going to increase their economy by increasing the amount of exports that they're able to send out because of the cheaper currencies. Now, exchange rates, as I said, they dominated the IMF's annual meeting in Washington on concerns that officials are relying on cheaper currencies to aid growth, risking retaliatory devaluations and trade barriers. China was accused of undervaluing their currency, while low interest rates in the U.S. and other rich nations are being blamed for flooding emerging markets with capital. This has caused the market on what is typically a quiet day, to actually excel and propel itself higher. As I said, we've been as high as about 1353. This is the candle that we're looking at today. Now, you know, typically Sunday is a very, very short update. We typically don't have much news to report. But with what I'm seeing, my personal belief right now is that as long as we have these currency wars, we are going to see gold head higher. I'm looking for the market to definitely trend higher through next week. Now, as you see, I've got my current Elliott wave count up on the board. This market has been so dynamic that I find it extremely fascinating and interesting. When we take a look at our different tops, this is that wave 5 right in here. This is the first record top that we got, of course, when we hit the market at 1221. Of course, after that, we had our basic consolidation and retracement period, waves A, waves B, wave C, which started the last full cycle that we had. That full cycle, of course, was 1 through 5. It ended in this last correction, C, right in here. But when we take a look at where that correction took us, it took us roughly to 1140. And at 1140 is really where we started this last dominating move to the upside. The interesting thing is this. Unlike typical retracements, and the reason that I've labeled this a Super Bull cycle is that we're getting extended rallies and very, very shallow corrections. And you can see this. When we take a look at, this is our first wave 1 in our last impulse phase, that last move up that took us to 1265. The market moves up, but it retraces significantly. When we take a look at this retracement, it's probably close to 38% right in here. We had, of course, this superlative wave 3. This wave 3 took us $161. This benchmark wave 1 took us $100. And then we had a very sizable retracement after wave 3. As you can see, we can put up our Fibonacci retracement, but it's going to come again close to 38%. That final wave 5 takes us back to that record top. And then, of course, we enter our corrective phase here, the C A, B, and C, which took us to where we're looking at right now. Now, here's what I'm finding interesting. If we take a look at this, our first wave was a wave of about $100. That $100, as I predicted last week, would take us to a minimum of about 1340. 1340 was my tagline if the market would go to 1 times that of wave 1. However, it's more logical if we witness this wave to go like we saw here in wave 3. And wave 3, as I said, was 1.61 times that. Let me highlight that for us, traders. This wave 3 right here was 1.61 times. In fact, we were able to predict the top of this market at 65 within $1 using that basic formula. If we go ahead and do that, and as you can see, we've got a low here of 1240. 1340 takes us up $100. 1401 would be the number if it goes 1.61 times. And at this point, that's kind of what I'm looking for. Barring something unforeseen, my belief is at this point we will probably see this wave be a typical extended wave of about $161 move, and that's based upon a calculation on this wave 1 here being $100. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow on Monday. Bye-bye.